But eventually, what traders are going to figure out is that high inflation is not good for the dollar and bad for gold because the Fed is going to fight inflation by tightening policy. It's because the Fed is not going to fight inflation. It's not going to tighten policy. And so inflation is going to continue to erode away the value of those dollars. So why would you buy them? You won't. You will sell them and you will buy gold. And that's exactly what traders are going to do. Pretty soon, bad news on inflation is not going to be good news for the dollar. It's going to be bad news for the dollar. And bad news on inflation is not going to be bad news for gold. It is going to be good news for gold. And in fact, there is an indication that traders are already waking up to this reality, because after this knee-jerk reaction to buy dollars and sell gold, traders spent the rest of the day selling dollars and buying gold, because the dollar gradually surrendered almost all of its early morning post-inflation news gains. And gold not only recouped all of its losses, but ended up closing positive on the day. In fact, it closed near the absolute high of the day with the great monthly close that I already discussed. So I think this is very significant because it shows to me that the traders are waking up to this reality that inflation is bearish for the dollar and bullish for gold. And they're starting to realize that it doesn't matter how much the Fed barks about its willingness or intentions or ability to fight inflation should it rear its head. The market's starting to realize that inflation isn't going to be fought, that inflation is going to win by default, because the Fed isn't even going to try to fight it because it can't. And so we're starting to see that. And if this is the case, I expect to see much bigger gains in the price of gold and silver in the very near future. Now, continuing with this theme of rotation out of overpriced speculative assets into conservative value assets, the same thing was happening with cryptocurrencies, Bitcoin in particular, in sharp contrast to the strong month that gold had in May. Bitcoin had a disastrous month. Bitcoin is down about 40% so far during the month of May. Of course, I say so far because Bitcoin is still trading. The stock market is done for the month, but not Bitcoin, because Bitcoin trades 24 hours a day, 7 days a week. So Bitcoin still has 3 more days of trading, including today, to end May. And so who knows? I mean, as I am recording this podcast, Bitcoin is below 35,000, right? And that's where it's down 40% on the month. But if you look at the Bitcoin chart objectively, right, you look at the slope of the huge parabolic move up, and now look at the slope of the move down, and it really looks like that entire move is about to get reversed. And to me, it looks like Bitcoin can easily fall not just to 20,000, which was the old high, but I think the low is more likely to come in somewhere between 10,000 and 15,000 before we see, some type of a dead cat bounce. Who knows? We may even do that this Memorial Day weekend, because the weekends are notorious for Bitcoin crashes because you don't have as much volume there. People are on vacation and they're not necessarily trading, and so you have less volume, and so maybe you can exaggerate these moves. So it wouldn't surprise me to see Bitcoin move down somewhere between 10 and 15,000. Ultimately, it's going much lower than that, but nothing goes down in a straight line, not even Bitcoin. There's going to be a bounce at some point, right? People buy the dip, and so if we do get a dip to between 10 and 15,000, I do expect that people will buy it, although it's really not correct to call something like that a dip. That would constitute a 75 to 80% collapse from the $65,000 high. But the point is, even if you are a Bitcoin bull, even if you think Bitcoin is going to go to 100,000, and that's why you got laser beams on your eyes, even if that happens, and I think it's pretty unlikely that it will happen. In fact, I don't even think it's that likely that Bitcoin makes a new high. but clearly, it's more likely that it gets back above 65,000 than it hits 100,000. But whether it gets to 65,000 or 100,000, there is a very high probability that before it goes up there, it's going down to 15,000 to 10,000 first. That is the path that it's going to take. And given the potential for that type of decline, there is maximum complacency out there. I still do not get any sense of fear or panic. Nobody is worried. Everybody is dismissing the possibility that Bitcoin could drop to 10 or 15,000. But if you look objectively at a chart, it seems pretty obvious that that's where it's going to go. In fact, it wouldn't necessarily mean it was a bearish long-term chart. If you look at the downward slope, if you connect the 2020 high, which was about 20,000, and you draw a diagonal line and you connect a couple of other significant tops, we broke out of that downtrend at the end of 2020. If we go back down and test that downtrend, which was resistance and is now support, I think it's around maybe 13, 14,000 is somewhere in there. And so that's why I'm picking maybe 10 to 15,000, somewhere in that range is a realistic place for Bitcoin to go, given the way the chart looks, given the parabolic nature of the ascent and how the collapse is not only mirroring that descent, but is actually taking place faster, which is typical, right? Markets take the elevator up and the staircase down. Now, obviously, in this case, Bitcoin took the express elevator up, and so now it's taking like a fireman's pole down. So even that movement is being compressed, which is why the whole thing could implode just over this weekend. But I think the real significant aspect of what happened to Bitcoin in May, in contrast to what happened to gold, is it should completely blow away the narrative that Bitcoin is digital gold. I mean, I've been saying this for the beginning, that Bitcoin is not digital gold. I mean, it's not digital gold because you can't use Bitcoin as a replacement for gold in any of its real world uses. I mean, if I want to make some jewelry, I can't just decide to use Bitcoin instead of gold. It won't work. Now, what the Bitcoin bugs will say is, look, Bitcoin is not a replacement for gold as far as its actual uses. Where you can replace gold with Bitcoin is in your portfolio. That instead of putting gold in an investment portfolio to be a safe haven, to be a store of value, to be an inflation hedge, you can substitute Bitcoin as digital gold, and Bitcoin will do for your portfolio the same thing that gold does. Well, this proves that that's complete nonsense. Gold was up 7.5% in May and Bitcoin is down 40%. How is Bitcoin behaving anything like gold? What it's behaving like is other high-risk assets that went down, like these overpriced NASDAQ stocks, like a lot of these new innovation type companies that Cathie Wood has been loading up on. Those stocks got clobbered in May along with Bitcoin. So Bitcoin didn't act like digital gold. It acted like some type of digital tech stock or something like that. It is not correlated with gold. It's correlated with very speculative assets. If anything, there is an inverse correlation between Bitcoin and gold. So if Bitcoin trades the opposite of gold, in what manner is it digital gold? In no manner. If you're looking for an asset to balance out a portfolio, an asset that might go up when other assets are going down, the last thing that you would want to buy is Bitcoin. Because when your risky assets are going down, well, Bitcoin is going to go down even more. So Bitcoin doesn't reduce the risk of your portfolio, it increases the risk of your portfolio. Look, what Bitcoin should do, if it was some kind of supercharged version of gold, a digital gold, maybe you would expect that when gold goes up, well, Bitcoin goes up even more, right? But when gold goes down, Bitcoin goes down even more. But since you expect gold to go up, why not buy digital gold? Because it will go up even more. Sure, if you're wrong and gold goes down, Bitcoin may go down more, but since you're buying gold because you think it's going to go up, well, why not just buy Bitcoin because it'll go up more? Except it doesn't do that. I mean, what behaves like that would be silver. So if you wanted a supercharged version of gold, well, you would buy silver because that's exactly the way silver behaves. Silver is highly correlated with gold.